Structure-based strategy pattern, trend reversal. Hello guys, I welcome you to this video. This is the Trade, and this is the continuation on our series on structure-based strategy. In our two previous videos, we talked about strategy based on market structure. The first one, we did an in-depth study of market structure. Then the second part, we studied about how to trade trend continuation. And in this very part of this video, we will be talking about how to trade the trend reversal. So if you want to learn how to trade trend reversal, if you want to understand how to catch the beginning of a trend from the beginning as it reversing, this video is for you. For no price goes up continuously forever, and neither does price go down continuously forever. It goes up for a while and reverses downwards, and it goes down for a while and reverses upwards, and the story continues just like that. The same process continues, repeating over and over again. So this video is very vital for you to learn how to catch a reversal trend. So how do you anticipate a trend reversal? That is the next thing we are going to be talking about in this video. And before I go into it, I want you to subscribe to the channel if you are new and like this video. And we are starting what I call October 10 for 10. That is a mentorship with a one-on-one live trading session in the month of October, and this is only open for 10 persons, only 10 persons. So if you're interested, you want to trade my signals back to back for complete 10 days, or you want to have one-on-one mentorship sessions with me back to back for complete 10 days straight, then check the Telegram link in the description of this video. Join the Telegram, inbox me directly, and I will add you to the October 10 for 10 group. And you will start with us from the 1st of October. Okay, so let's continue right away. How do you anticipate trend reversal? Number one, these are the tests I use in anticipating trend reversal. Number one is what I call lower time frame change of character, right? Change of character. So when price is trending up downwards, as you can see here, price was trending downwards from here, right? This is a high, a low, a lower high, a lower low, lower high, a lower low. This has been the trend. So price was trending downwards here. Then at this point, price now pushed up and made a higher high instead of lower high as it has been doing. So at this point where it broke this previous high, we call it a change of character, right? So when I say this, I will instantly know that price is about to reverse, right? So the next thing I want to do is to mark out my demand zone, which we have here, usually your order block or breaker block. So I wait for price to retrace back into that demand zone, and I place my trade, and that's it. Very simple, very, very simple. This is not difficult. We are going to go to the chart to look at this, but let me finish up first. Now the second one is candlestick patterns, right? Candlestick patterns. So these are the three candlestick patterns that are most important to me. Any other one I may not consider much, but these three candlestick patterns. The first is engulfing candlestick patterns, followed by star candlestick patterns, and then followed by pin bars. Okay, you have the bullish engulfing, you have the bearish engulfing. When price is in a downtrend and wants to reverse to an uptrend, you are most likely going to see a bullish engulfing candlestick pattern most of the times, especially around your 1 hour, 4 hours, and 1 day time frames, right? You are most likely going to see a bullish engulfing candlestick pattern. If it is in an uptrend and wants to reverse downward, you're most likely going to see bearish candlestick pattern. The morning star. The morning star, unlike the engulfing candlestick candle, is a 3 candlestick pattern. We have a bearish candle, a doji candle, or a pin bar, and then you have a strong bullish candle, right? This is what we call morning star. The opposite is the evening star. So when price is in the downtrend and you see the morning star, you know that price wants to reverse to an uptrend. When it is in an uptrend and you see an evening star, you know that it wants to reverse to a downtrend. Okay, so here we have the pin bar, the bullish and bearish pin bar. So these pin bars have their different names. You have the hammer, you have the spinning top, you have the hanging man, you have the inverted hammer. All those are grouped and classified as pin bars. That is what I normally call rejection candles. When price is in the downtrend and wants to reverse to an uptrend, you are going to see a bullish pin bar. When price is in an uptrend and wants to reverse to a downtrend, you are going to see a bearish pin bar. Now take note of this very important statement I want to make now. Candlesticks are important, they are meaningful, but that is only when they are happening within a key point of interest. Hear that again. Candlesticks are important and meaningful in the market. They are the language of the market, but their importance should only be taken cognizance of if and only if they are within a point of interest, like your support level, your resistance level, your demand level, your supply level, your higher time frame order block or breaker block. So make sure that these candlestick patterns are occurring within a point of interest, a valid point of interest. Otherwise, they won't work. Now let's go to the third one. The third one is what I call chart patterns. We have 3 classes of chart patterns. We have the reversal chart patterns, the continuation chart patterns, and the bilateral chart patterns. The continuation chart patterns show chart patterns that signify that price wants to continue in the same direction. The bilateral chart patterns are chart patterns that could signify reversal or continuation, only depending on the side of the breakout, right? If the price breaks out at the opposite side, then it goes to the opposite direction, it is a reversal. But if it breaks out to the original direction of trend, then it is a continuation. So those ones are there. Meanwhile, here we are studying the third one, which is the reversal chart pattern, right? So to catch a trend reversal, you have to take note of these reversal chart patterns. So whenever you see them print on the chart, just wait for a break and retest in that opposite direction of the trend, and you are good to go, right? Now these are the ones that matter so much. There are others, but these are the most important ones that occur almost every day and have high rates, right? So we have the double top and double bottom. This one is so good. It occurs every day, every time frame, and on every trading instrument, right? We have the head and shoulder pattern and the inverted head and shoulder pattern. We have the rising wedge and the falling wedge. When you see a double top, you anticipate a sell, right? When you see head and shoulder pattern, you anticipate a sell. When you see a rising wedge, you anticipate a sell. When you see a double bottom, you anticipate a buy. When you see an inverted head and shoulder pattern, you anticipate a buy. When you see a falling wedge, you anticipate a buy. These are the 3 chart patterns I have here that I consider most important. There are others, right? So Take note of this, search them out in your chart and practice them. Alright, so now if you have watched these points, congratulations. Now we are going to go to the chart to see 1. Change of character, 2. Candlestick, and then lastly chart patterns. We might not see all the chart patterns, we will not see all the candlestick pattern, but we are going to get at least one example for these 3 factors that we use to anticipate chart reversal. Alright, so this is actually step index. We are going to be looking for examples of the patterns to anticipate a trend reversal as listed earlier. Here we have a double bottom here, which is one of the examples we listed earlier. So we have a double bottom right here. So look at this. This is a double bottom. As you can see, we have this first test, this is second retest. Yeah, double bottom, the first and second bottoms, and then here is the neckline. All right, you see that? Now this is how to treat the double bottom and double top. What I'm going to teach you here using double bottom, just flip it upside down. You have the same thing for a double top. Okay, so first identify the first bottom and then the second bottom. Then identify the neckline, very important. Then wait for a breakout of the neckline. Wait for a breakout of the neckline. So this is the first bottom, this is the second bottom, right? And then this is the neckline. Mark it out like this. Mark it out. Wait for a breakout, which we got right here. Is the breakout. Then wait for price to come back and retest it. When price comes back and retest it, then that's when you now buy. You can see, and that's exactly what we got here. That's exactly what we got right here. And you can see the result. Very massive. This very strategy is so profitable. The probability is high, you can see, and that was what? That was a win. That was a win. Okay, so, and that gave us a trend reversal. You can see the reversal up to this point, right? Even at this point, we also got same thing. So that's it about trend, about double top or double bottom. That's about chart patterns. You will keep seeing it everywhere. Now we have this one also. We have the same thing almost everywhere. We have it here also. Almost everywhere on the chart, we keep seeing it. This one here is triple top. 1, 2, 3, right? And then breakout, retest, and price dropped. So you can have the both of them. Now we also have the change of character. The change of character pattern. This is one beautiful pattern also that you can use. So you can see that here, price made a low, a high, right? And dropped. This is a low. This is a high that it made. This is a low, lower low. This is a lower high, right? And then this is a lower low. Then at this point, after price made this high, made a low, it now went and broke this high, right? Making a higher high. That is a change of character. And then it drops down to this other block you are seeing here, down to this other block. If you check properly, you see this other block. You can see the other block right there. So that is where price went to, and then retested it and then bought. That was a reversal that triggered the reversal, right? This is so important. You have to know how to spot these things out when you see them, guys. You have to be able to spot them out, because that is what is going to make you a profitable trader. That's what is going to make you a profitable trader. This is a change of character right here, and this is the other block where price came to retest. Is it, and then pushed up all the way here, right? You can see that. So whenever you see this, just take your trade, master it. You can screenshot it, you can pause this and master this setup very, very well. Now let's look for what we call candlestick pattern. Candlestick pattern, let's go to the higher time frame. They are more significant at the higher time frame, and usually within areas of interest, like I said earlier. Now we have this one here. This is a typical example of star candle, right? We have this star candlestick here, and see, this is a star candlestick here I'm talking about. This here, you can see the bearish candlestick here, and you can see the small candlestick inside them, which is doji, and then you can see the bullish candlestick here. So that is the star candle. This one is the bullish, this one is the morning star, right? And then look at where it occurred, this area of interest, this other block right there. That's where it occurred, and that is why it worked. So look for this candlestick pattern at your area of interest, and this is the basic this is the basis of the strategy they call CRT, candle range theory. Right? Candle range theory is just a theory they developed, but it has already been captured in price action. That is why I love price action. Simple price action. Everything they are teaching today, both in ICT and SMC, has already been captured in simple price action. So when they are explaining ICT and SMC, I just view them with the eyes of price action. I will know that everything has been captured. Maybe I can just enlighten and elaborate more on it. So I sometimes I listen to it because most times it broadens my knowledge, right? Yeah. So everything is captured in price action. All right. Let's see if you're going to see engulfing candlestick pattern. Yeah, we have one here. This is an engulfing candlestick pattern. You can see these two candlesticks here. You can see the two candlesticks here. Let me get this. Yeah, you can see the two candlesticks here. This is a bullish engulfing candlesticks. You can see the red one is bearish and it's small, and then the black one here, which is the bullish one, very strong candlestick. And then from there, price just kept pushing up. That is engulfing candlestick pattern. We have it here again. Same thing here. Can see first one, second one, and then price kept pushing up. Just like that, guys. Just like that. These are powerful candlestick patterns that when you see, observe what is happening and then take advantage of them. So that's just it, guys, about candlestick pattern. And then chart patterns. We talked about rising wedge. I think we have one here. Look at this here. Look at this very beautifully printed, right? Very beautifully printed right here. Yep. And then price broke out of it and then came back for a retest, and boom, it dropped. This is it. So you can just go on and on and on, and you keep seeing them. I don't know, this one might not be it. but you keep seeing it. You keep seeing it everywhere. Everywhere. So this is it, guys. This is it. It just occurs everywhere. So go study your chart and look out for these things. And if you want to trade my signals straight up for complete 10 days in this month of October, then you have to be a part of the October for 10, like 10 for 10 program. You have to be a part of the October 10 for 10. You have to be a part of the October 10 for 10 if you want to stay under my mentorship for straight 10 days. You want to learn from me live through live sessions. You want to ask me questions directly. You want to see my charts while I see yours. Want us to share charts together and learn directly from me in this month of October. Complete 10 days, straight for complete 10 days. Then contact me via Telegram. Inbox me via Telegram. The Telegram link is in the description box down below this video, right? So you will learn and you will earn all together in this month of October. Contact me, and the seat is only reserved for 10 persons, just 10 persons. That is why it is called October 10 for 10. Just 10 persons, right? Just 10 persons, straight 10 days, 10 persons for 10 good days. You will learn and you will earn. Contact me right now. Like this video, share to your friends, and subscribe to the channel because we bring value every now and again. Thank you, guys. This is the Alpha Trade reminding you that it can only get better.